The biggest XRP developments aren't happening in the price chart at all. While social sentiment around XRP has collapsed to levels not seen in months, institutions are doing the exact opposite. Tokenized stocks are expanding, Ripple is deepening payment infrastructure in Latin America, real-world assets are launching on XRPL in Japan, and some of the biggest names in crypto are openly saying the next phase of growth isn't about speculation, it's about tokenization and stablecoins. Most investors are staring at the market. The institutions appear to be building the rails underneath it. And if that's true, today's developments may be telling us far more about the future of crypto than the latest candle on a chart. Let's break it all down. This video is for informational and educational purposes only and should not be considered financial advice. Always do your own research before making any investment decisions. Welcome back to Ledger Pulse, your home for crypto market analysis, XRP developments, institutional adoption, and macro trends shaping digital assets. In today's episode, we're talking about tokenized IPOs, tokenized stocks, Ripple's latest expansion, XRPL real-world asset adoption in Japan, and why XRP sentiment has fallen to one of its lowest levels in months. When you connect these dots together, a much larger picture starts to emerge. Because while many investors are becoming discouraged by price action, the infrastructure story appears to be accelerating. Let's start with something that most XRP holders are probably feeling right now: frustration. According to data shared by Sentiment, XRP's weighted sentiment has fallen to its lowest level since October. In simple terms, social media conversations around XRP have become overwhelmingly negative. People are tired. Many expected regulatory clarity to arrive sooner. Many expected institutional adoption to translate into price action faster. And after years of waiting, a large portion of the community appears exhausted. And here's the interesting part. Historically, some of XRP's strongest rallies occurred when enthusiasm disappeared. Not when everyone was excited, not when influencers were calling for massive price targets, but when investors become bored, when participation dropped, and when confidence faded. Markets have a tendency to move in ways that cause maximum frustration. When everyone expects immediate upside, markets often stall. When people finally give up, that's frequently when trends begin to shift. That doesn't guarantee anything, but it does create an interesting backdrop for everything else we're about to discuss, because while social sentiment is deteriorating, institutional activity appears to be accelerating. What's fascinating about sentiment indicators is that they often tell us more about investor psychology than they do about the underlying asset itself. Think about where we are today compared to just a few years ago. Back then, XRP holders were fighting through lawsuits, exchange delistings, and constant uncertainty. Today, much of that uncertainty has been reduced. Ripple has expanded globally. Institutional partnerships continue growing. The XRPL ecosystem is larger than it was several years ago. Yet many investors feel more frustrated today. Why? Because expectations changed. When investors believe a major catalyst is approaching, they begin pricing in future success before it arrives. The longer that success takes to materialize, the more disappointment builds. Eventually, frustration turns into apathy, and apathy is often the final stage before people stop paying attention altogether. The market has a strange tendency to test conviction, not through fear, but through boredom. Most investors can survive volatility. What many struggle with is waiting, especially when they watch other assets have explosive rallies while their own investment appears stuck. That's one reason sentiment data becomes so interesting. It's measuring the emotional state of the crowd. And historically, the crowd tends to be most pessimistic near major inflection points. Again, that's not a prediction, but it's a pattern worth recognizing. One of the biggest stories this week came from Ondo Finance. The company announced that SpaceX, the largest IPO in history, is being tokenized and made available through Ondo Global Markets. Think about that for a moment. For years, tokenization was discussed as a future possibility. Now we're watching major financial products being placed directly onto blockchain infrastructure. Not theoretical, not experimental, not years away. Today. This matters because tokenization changes how financial assets can be accessed and traded. Traditional markets operate with restrictions, limited trading hours, regional barriers, settlement delays, and layers of intermediaries. Tokenized assets aim to reduce many of those friction points. Instead of waiting days for settlement, transactions can potentially occur far faster. Instead of being locked into a single financial ecosystem, assets can become accessible across multiple blockchain networks. Let's zoom out for a moment and think about what tokenization actually represents. Most people hear the word tokenization and immediately think about crypto. Institutions don't. They think about efficiency, reducing costs, improving settlement, and increasing liquidity. Those are very different conversations. For decades, financial markets have operated on infrastructure built for a different era. Settlement delays were accepted because technology limitations made them necessary. Cross-border transactions were expensive because there weren't many alternatives. Access was restricted because geographic boundaries mattered. Blockchain technology challenges many of those assumptions, not because it's trendy, but because it allows assets to move differently. That's why BlackRock continues discussing tokenization. That's why major banks continue investing heavily into digital asset infrastructure. They're not doing this because they suddenly become crypto enthusiasts. They're doing it because they see efficiency gains. The fact that the largest IPO in history is now being discussed in a tokenized format shows how far this conversation has progressed. 5 years ago, this would have sounded radical. Today, it's becoming normal. The second Ondo development may actually be even more important. Ondo announced native swaps for more than 260 tokenized stocks and ETFs directly within Ledger wallets. This represents another step toward bringing traditional financial products into blockchain ecosystems. For years, crypto focused primarily on digital native assets, Bitcoin, Ethereum, altcoins. Now the focus is expanding. Stocks, bonds, treasuries, funds, real-world assets. Everything is becoming a candidate for tokenization. The most important thing about Ondo's announcements may not be Ondo itself. It may be what Ondo represents. For years, crypto operated largely in isolation. Crypto assets traded against other crypto assets. The ecosystem largely existed within its own bubble. Now that wall is beginning to break down. Every tokenized stock, every tokenized ETF, tokenized treasury, tokenized bond brings traditional finance one step closer to blockchain infrastructure. And once investors begin accessing traditional assets through blockchain networks, expectations change. People begin expecting instant settlement, 24 access, global availability, reduced friction. In other words, they begin expecting traditional finance to operate more like the internet. That shift could become one of the most important economic transitions of the next decade. Here, we have Ripple announce an expansion of its long-standing partnership with Bitso. This development introduces MXNB, a regulated Mexican peso-backed stablecoin, onto XRPL. The stablecoin will also integrate into Ripple's payment infrastructure. Stablecoins are rapidly becoming one of the most important sectors in digital assets. Why? Because they solve one of the biggest problems in global finance: moving value efficiently across borders. Ripple's strategy increasingly appears focused on creating a network where regulated stablecoins can operate alongside traditional payment infrastructure. RLUSD brings regulated dollar liquidity. MXNB introduces regulated peso liquidity. Together, they create additional settlement options across the network. One thing investors frequently overlook is that payment networks derive value from scale. A payment network with one participant isn't useful. A payment network with thousands of participants becomes extremely powerful. This is why Ripple's strategy appears focused on expanding corridors rather than chasing headlines. Every new stablecoin, every new institution, jurisdiction adds another layer to the network. Think about how the internet grew. The internet didn't become valuable because one website was launched. It became valuable because millions of participants connected to the same network. Financial infrastructure operates similarly, and Ripple appears determined to position itself in the middle of that trend. One of the most overlooked developments this week came from Japan. A proof-of-concept initiative is utilizing XRPL technology to support green power certificates connected to renewable energy production. Most conversations around tokenization focus on stocks and bonds, but tokenization extends far beyond financial securities. We're talking energy credits, carbon markets, supply chains, real estate, commodities. The Japanese initiative highlights something many investors overlook. Blockchain infrastructure isn't limited to payments. It can also serve as a system for recording ownership, tracking information, and improving transparency. Japan has often been ahead of the curve when it comes to digital asset innovation. Many institutions increasingly view blockchain as a database, a record-keeping system, a coordination layer, a way to improve transparency. That's a much broader vision than simply moving money. Those use cases often create adoption pathways that have nothing to do with speculation. And that's important because real-world adoption rarely happens the way investors expect. It usually happens quietly, gradually, and without headlines, until suddenly everyone realizes the technology has become embedded into daily operations. Another important signal came from comments by Bitwise CIO Matt Hougan. According to Hougan, Financial advisors remain interested in crypto, but their focus is evolving. Instead of concentrating exclusively on Bitcoin, advisors are increasingly discussing stablecoins and tokenization. This aligns with nearly every institutional trend we've been tracking. The first phase of crypto was experimentation. The second was speculation. The third phase may be integration. Integration with banks, payment systems, capital markets, and asset management. And if that's where we're heading, infrastructure becomes increasingly important, because infrastructure is what supports integration. No one talks about the internet cables beneath the ocean every day, but global communications depend on them. Future financial systems may depend on infrastructure layers that most retail investors rarely discuss. So where does XRP fit into all of this? If you're focused exclusively on price action, the recent market has been frustrating. But if you're looking at infrastructure development, the picture looks very different. Ripple expanding payment corridors, regulated stablecoins launching on XRPL, tokenized assets becoming more accessible, real-world asset experimentation in Japan, and institutional discussions shifting toward tokenization, those aren't isolated events. They're all part of the same broader trend, the digitization of financial markets. That doesn't automatically mean XRP benefits from every development, but it does mean the ecosystem surrounding XRPL continues expanding. And successful infrastructure often grows quietly before the market fully appreciates what's happening. Perhaps the most fascinating part of this entire story is the contrast between sentiment and fundamentals. Sentiment is weak, engagement is down, and many investors are discouraged. Yet the headlines keep coming. More partnerships, more tokenization, more stablecoins, more institutional adoption, and more infrastructure. One of the greatest investing challenges is separating narrative from reality. Narratives change quickly. Reality changes slowly. And today, the narrative says XRP is underperforming. The narrative says enthusiasm is fading. Those observations are true, but they're only part of the story. The other part of the story is infrastructure expansion, institutional experimentation, tokenization growth, stablecoin adoption, cross-border payment development. Those trends continue regardless of social media sentiment. That's why experienced investors often pay attention to what institutions are doing rather than what the crowds are feeling. Crowds react to price. Institutions build for future demand. And right now, there appears to be a growing gap between how people feel about XRP and the pace of development occurring around the ecosystem. Whether that gap eventually closes remains to be seen, but it's certainly something worth watching. As always, the most important question isn't what happened today. It's where these trends lead over the next several years. Are we witnessing the early stages of a tokenized financial system? Will stablecoins become the dominant bridge between traditional finance and blockchain networks? And could XRPL become one of the infrastructure layers supporting that transition? Let me know your thoughts down in the comments. Do you think the market is underestimating what's happening around XRP and tokenization? Or do you think investors are right to remain cautious? If you enjoyed this breakdown, make sure to like the video, subscribe, and turn on notifications so you don't miss future updates. Thank you for watching, and remember, while most people focus on today's price action, the biggest opportunities are often found by watching where the infrastructure is being built. I'll see you in the next one.